Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is CPI Live. Today, we're going to look at the U.S. inflation numbers, which is going to be the biggest market driver of the week. I want to give a big shout out to everybody out there on YouTube. Rumu Academy, good to see you. Michael Adeyemi, good to see you. Everybody back in the How to Trade trading room, always a pleasure. Ladies and gentlemen, I think that it's going to be a fantastic session here. We're going to have some opportunities to trade. Let's get right out to price action. We had a trade idea that came across the board yesterday. Finally, a little bit anxious over the room. We better watch it. Better get those stops down and leverage in check. You don't want to run into this economic release with a little bit of aggression. You got to wait, let the market come to you. You'll be just fine. In any case, right here, U.S. dollar, Swiss franc. This was a pendulum trade that we set up yesterday. If you didn't see the pendulum stream, go back and check it out. It's a pretty darn good strategy. This trade's in the money. And we have to really understand, what's our goals, what do we want to do, and what is our risk profile. Right now, our risk profile is significant. 10 minutes from now, we've got CPI dropping about 9 minutes and 10 seconds, actually. So it's going to be a big, volatile event, especially, as we look at the U.S. dollar. So right there, there was our check, right? That really a beautiful trade. Your high right there was 86.12. We came back down. This trade was live. Yesterday, we did this on the U.S. Mid-session brief and also on the Asia-Pacific preview. Came back down. Now we're short from just beneath 86. I really like this trade. Stop loss up there at 86.31, 50% level. That's our first profit target. It's 85.57. We're about 67. So we're about halfway there. If you wanted to let this one go, let this one ride, go ahead. See what happens. If you want to move it to break even, you can certainly do that as well. Or if you want to just take the profits right now, you can. Remember, CPI is going to shake everything up, so be very, 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 very careful with what you're doing with your trade management. You could get hurt really bad, or you can make a lot of money. So it really depends on what you want to do here, how aggressive you are. Good to see everybody. Bobby Bob, always a pleasure. Bobby Dibble, Dragon. Yeah, it's going to be a fascinating session. Well, here's a trade that I'm looking at right now. Really like this one. This is a Great Britain Pound USD. I've got a monthly anchor point coming into view right around 130 even. So I've got my market order down right there, or my limit order, my buy limit order at 130.09. I'm going to go ahead and throw that in the queue, and we're going to see how this works. And the idea here is to buy this key level right after the CPI event. Now, right here, this thing's setting up relatively perfect for me. We're trading about 130.60. We're a ways off of my number, so even if we get that big crash or that big rush of volume and action, we're more than likely going to get a bounce right there. So I'm interested in that. I'm going to be looking for 25 to 50 pips on this one. We're not going to let it draw too far against me, but I want to let this thing set up. Now, even though we're going to take probably a little bit of heat on that initial entry, that's okay with me. I'm not too worried about it. I want to be in the queue and be ready to trade from there, and then we're going to let the thing unfold, and we're going to manage the trade. We're not going to let it get away from us, but we're going to that initial rush of action, I want to see it penetrate our level and then bounce. That's what we're looking for here, and it's one of those that I'm anxious to see. I've been waiting on this Great Britain Pound USD trade for a while, and as you can see, the DOM is active. That is for sure and certain. The DOM is active. All right, one other level that we got to look at, and that's gold. This is one that I cautioned everybody on yesterday, and you can see this 26 level, this 26.03 has been absolutely money in the bank this week. If you've traded it and you've done well done. For me, it's been, gold. You can see that we've been bouncing repeatedly off of that 26.03 level. And what I really want to do is point out how horizontal support and resistance levels work. We take it down from a weekly to a 4-hour time frame. There was our first trade, beautiful action. We got another chance to get that accumulation trade right off of that 26 level, 26.05. I'm very, very careful here. Very, very careful, because sometimes, and not just sometimes, but a lot of times, when you have a horizontal support and resistance level that's been tested multiple times and it finally gives way, we don't just go a little bit, we go a lot of it. And I would be looking, once that 26 breaks, I would be looking down there 50% at 25.78. That's not an entry for me. If, in fact, we do break that, we're going to go down to a 5-minute chart or a 1-minute chart, and we're going to look to sell, because the breakout will be on. I'm watching that relatively closely. I think that we're going to have a chance here, potentially, to make a few pretty good trades on gold. So we're watching that as well. And then the last market that we're going to have, and then we're going to go ahead and preview CPI. NASDAQ, E-mini NASDAQ. Futures, we've got this on our trading dome. You can see it's very difficult for this thing to even track just the volatility in the E-mini NASDAQ. But what we're looking at here is we're looking at a crossover strategy on a 1-minute chart. This is aggressive. This is extremely aggressive, but I don't want to do this just yet. I want to do this after. I want to do this after we get our number. Now, right there, I was reading something on Twitter about 5 minutes ago that somebody had leaked the CPI number. I don't know that that's true just yet, but you could definitely see this price action suggests that somebody is sort of betting on a higher CPI. Nice big 1 minute candle. We broke. There's our crossover. This is the 920 EMA strategy. 9 crosses over the 20, and we're also going to incorporate a little bit of RSI, relative strength index confirmation. And the way that this would work right here is a great example. You're in overbought territory. We're going to look to sell that. We're going to look to sell this market, but we can't just sell it willy-nilly. We got to wait for our signal, and our signal in this case is going to be the 9 crossing under that 20. Now, I've gotten a lot of great feedback on the videos we put out on the 9 EMA. Also got a lot of great criticism on the videos. I love skeptical traders. Remember, question everything. Don't sit here and just listen to me and says, well, Shane says trade at 920. No, it is a way to trade, and I think we're going to get a little bit of action. I'm curious to see what happens here in the next 5 minutes. 1 minute chart, E-mini NASDAQ. We're going to go right out there and be trading that thing live as soon as our number drops. Okay, let's get to it. All right, this is our fundamental. Remember, if you got switch markets, you're covered. If switch market services your municipality and your geographical locale, you're in there. You're absolutely in there. So, Marco, good to see you. So, if you need a place to trade, check out Switch, 100% credit bonus. Remember, pendulum strategy is just one of the strategies we offer here. I just sort of unpacked that US dollar Swiss franc pendulum. It looks pretty good. I'm interested to see if we hit our profit target, if it bounces up against us. Hot CPI number is going to mean bullish USD. In any case, that is the number for today. CPI Live is what we're doing, and we're up in about 3.5 minutes. What can we expect out of our CPI report, hot or cold? Now, remember, if CPI comes in above expectations, that's going to be bullish for the USD. The idea is going to be we're not going to cut interest rates as aggressively, or potentially we may hold them firm. I believe that this report and the next report are going, well, I mean, there's no I believes. They're going to be huge in what the Fed does in November. I think if this thing comes in hot NFP last week, okay, that's bullish for the USD. If we get a hot CPI number here today, I think listen, we've gone from expecting a 0.5 point rate cut to a 1/4 point. I think it could be flat. So I'm interested to see what happens here. I got a feeling that it's going to come in hotter than expected, but we'll just got to wait and see exactly. Remember, as soon as you get the number, shout it out. Shout out regular CPI in the live chats. I'm not going to be watching it. We're going to be watching price action on that NASDAQ and a few of our other trades that we have going. In any case, we expect CPI to come down modestly from 0.2% in August down to 0.1% in September. We think that that's more than likely going to be the way forward. I'm not so sure about that, especially after that hot NFP number. But remember this, it's an election year. All these numbers are coming out of the federal government. What does that mean? It means it looks real good with an election coming up in under 30 days. It looks real good, and I mean real good, if CPI is down and jobs are up. Just saying. I'm not calling conspiracies. I'm just saying. So something like that's definitely going to be a big deal. Let's get out to what we can expect here, though. CPI, this is really what to remember here on this release. The consumer price index in the U.S. increased to 314.80 in August from 314.54. It's an all-time high. We're at all-time high levels, so we've seen zero pullbacks in CPI. We haven't even seen this thing plateau. And this right here is what we're worried about. This trajectory, this 45-degree angle of our raw CPI data growth. That's what we're worried about. We need to see at least a plateau. Odds are we're not going to get a pullback, but we need to get at least a plateau, and we haven't got that. Now, just sort of for your greater reference, this is what we're worried about. Now, going back, CPI always rises. The nature of fiat currency is to always lose its value. Prices always rise. It always takes more money to keep the whole machine going. That's the way that everything's designed. Now, the problem we have is going back since COVID, we have not just been growing at a normal rate. We've absolutely exploded inflation-wise. So big time number there. I'm expecting this thing to come in maybe a bit hotter than usual. We got about 50 seconds left. All right, let's get back out to price action. That's what I want to focus on here. You'll notice our E-mini NASDAQ 1 minute chart is an interesting territory. Now take a look at what we have. We're starting our 920 strategy right now. We're going to start it right on our economic data release. You'll notice that we're sort of down near oversold territory. On that RSI, we need to get beneath 30. to be oversold and above 70 to be overbought. So right now we're sort of in the middle, but that's gonna gravitate a lot as this release comes out. Now what we're waiting for is a little deviation from this RSI to get into a situation where we can look for that sell signal or that buy signal. Right now we've got nothing on, and we're just waiting for that. Okay, right there's your number, there's your pop. Somebody just committed to this thing, but you'll notice, just look at that action. Okay, right there, we've got an absolutely huge. Okay, now we're officially in oversold territory. So what does that mean? It means that we're looking for a crossover. We're looking for that 9 to cross that 20, and then we're going to look to buy the market. What did everybody just get? What was the number? It just dropped a few seconds ago. Look at this crazy price action. Now, we could definitely get involved here. We just have to wait for our crossover, and this is a good time to be doing this because you could definitely get into a runner. That's for sure. So right there, we've got that initial incredible choppy price action here out of the E-mini NASDAQ futures. We're going to be looking to either get long or short right here, depending on what exactly our signal tells us. What did we get? All right, here we go. The CPI, the Consumer Price Index in the United States, increased to 315.30 in September from 314.40 in August of 2024. Consumer Price Index CPI in the United States. So once again, we are at all-time highs. We are up. So what was the growth rate? Does anybody have the growth rate? If not, I can go looking for it just as easy. No big deal. But the growth rate's interesting. Right there, though, we did increase. Did we increase as expected? Yeah, well, I mean, it's sort of an interesting thing. It looks like we did. So I'm going to be watching this relatively closely, as this price action unfolds. We don't yet have our signal, but right there, we're in oversold territory. We're looking to buy this thing. So we're a little bit of a reversal. We get a crossover there, and we're looking to buy into that E-mini NASDAQ and maybe get in on a runner. 2.4 year over year. That's not the best. That's not the best number that we were looking for. Let's have a look. Let's go right here. Economic calendar. Watching this closely. Remember, we're in oversold down there on the RSI. Let me see. What do we have here? What's our final number? 2.4 year over year. Let's see. Let's get right out to the numbers here. You've got 0.3% month over month. That ticked higher. CPI 0.2%. That stayed the same, but that's above expectations. This is an incredibly hawkish reading here. A very hawkish reading for the U.S. dollar. So not only do you have a hot NFP number that came in last Friday, but you have a hot CPI number. What could that mean? What could that mean? It could mean that dollar more than likely is going to rally on the back of this. Right here, we're still looking to get our break. Okay, there was our oversold reading. We're looking to buy. In order to do that, we have to have our 9 EMA cross our 20, and we're going to be watching that relatively closely here for the next several minutes. Okay, let's get out to price action. U.S. dollar, Swiss franc, our pendulum trade hit pay dirt. If you guys got that one, fantastic. If you don't know what I'm talking about with Mario Singh's pendulum, go back, check out the workshop that we did yesterday. I set this trade up for you. This was a pretty good one. This was a banger. This was a nice trade. Went up, tested, came back down, and we hit our first profit target there at 85.67. Nice little 32 pip winner. I like it. I like that a lot. I think that's fantastic. And then right here, if you are playing for that second profit target at 90%, 85.36. Let's go there. Okay, Great Britain pound USD. Did we in fact get a strike of our level right there? What was our low? 130.10. And where was I sitting? 130.09. Ouch, that hurts. In real time, I probably would have got that trade, but we had to set that. We had to set our our entry point in. We had to set our entry point at some level. I picked 130.09, 130.10. Probably depended on your broker whether you got that or not. But really, I mean, that should have been a pretty good strike. You could have bought a quarter and been happy. I just didn't necessarily want to put that much risk down on that trade. But I'll tell you what, that is exactly what we're looking like from the Great Britain pound. Absolutely a beautiful trade. I mean, if you got this one, well done. I mean, realistically, you need to shade these long-term levels and be aggressive with them. 130.03. We probably could have easily bought 130 and a quarters and got that 50 pip bounce we were looking for. That was a fantastic trade. I mean, as far as Fibonacci's go, horizontal support and resistance, and just understanding what market dynamics are, that's a pretty darn good trade. Now, the one that I'm confused about is this one right here. We came down on this gold chart. We just went down and touched our key level again. Now, I could have said easily, yeah, you need to buy. Right down here again, I was very careful because if we do break that, we're going down a lot. You can see gold's on the rally right now. We've got a bit of a 1 minute uptrend. Given that fundamental, I'm not really buying it. I don't think we should be buying up here. I really, clearly that was the best buy in town was that 38% retracement, but we had to respect it due to the fact we've already hit that thing 2 or 3 times this week. All right, do we have our trade building up? We're still in oversold territory. It looks to me like we are going to get a buy signal here. We're looking to buy the market, buy the market, buy the market, buy the market right here on this 920 strategy. All right, the first thing I want to do here is really get on out to the Euro USD. It's a fantastic, really a fantastic pair to be scalping. If, in fact, you wanted to scalp this thing, let's go right to our 5-minute chart and see what our price action is, okay? Sort of tough price action. That's what I would – it's not a doji necessarily, but you'll notice on these economic news releases, you get the big fake out to the bottom that wipes out all your retail longs, and then you get the head fake to the top that wipes out all your shorts. More times than not, this is the situation. This is what we see. You get chopped to death in these conditions. You absolutely get chopped to death. And it's really difficult to sit here and go, well, you know, should I be long or should I be short? I don't like any of it. If we wanted to, if we were aggressive, we could go 1-minute chart and we could look to buy a retracement. I really wouldn't do this right here. I think it's a mistake, but we could. 38% would be your pullback. I mean, are we trending? No, we're not trending. We're in complete rotation. We're trading inside of our CPI candle, our 1-minute candle. I'm not interested in doing any of this. Not interested in doing this 38% buy. I want something that's trending, and I guess you could say that your gold market's sort of taken off to the bull. For me, you know, have we got an entry yet? No, not really. Could we get an entry later today? Yeah. I would definitely be looking to bid down here again. I mean, that right there is prima facie evidence that there's a lot of bidders on our key level. Absolutely a lot of key levels. Bobby Bob, how do we trade gold now? Should we look bearish? I mean, you could sell right now if you wanted. To me, I would be very careful selling, but you are sort of in failed auction territory. If you wanted to take a short here on gold, we all know where downside support is. We all know it. It's down there at 2,600. We've talked about that. I've spent way too much time talking about this. But something like this, dial in on that spike low, 26.29. Excuse me, that's going to be your sell. We went right up to 26.24. Now we're trading 26.18. That 38% on the daily, if you wanted to scalp that to the short, this trade's got a lot going for it. 26.29 to the top. You've got an EMA right there. Excuse me, at 26.27, 26.29. So anywhere right up in there is going to be a relatively decent short. Do I want to be short here? The fundamentals tell us we should be short. Hot CPI means stronger dollar. Stronger dollar means lower commodity prices. Even gold. Hot NFP, hot CPI. What does that mean? It means that we have a chance here maybe to trade the dollar to the bull. Let's get right out to our interest rate expectations and see exactly what they say. 28 days. We'll have FOMC live for you. Be sure to tune in. What's happened? Okay, where are we at right now? 4.75 and 5. We're still pricing in a fairly aggressive rate cut, 80% on a quarter-point rate cut, but now there's a 20% chance that maybe we're standing static. I think that's going to go, yeah, I mean, this is growing right here. Now there's a 20% chance that we don't get a rate cut in November. I don't think you're going to get a rate cut in November. I really don't. I think that this is going to throw some serious shade on what the Fed's trying to do. Let's try it. Let's refresh again. These are always changing, guys. Our interest rate expectations are always changing. 21.8. Let's hit it one more time. I think it's going to be up around 30 or 40% by the end of the day. 78 and 21. So there's about a 20% chance no rate cut. That's huge. What is that huge for? Well, I mean, typically that would mean that's hawkish policy. So if you wanted to trade gold and you were serious about it, 27, I got a 13-period EMA right up there, 26.27. All right, we're still waiting on our but look at this. I mean, this is beautiful confirmation. You really do have it in an oversold territory. Right now, we're just waiting for that 9 EMA to break back up over the 20, and that's going to be our buy signal. We'll see, in fact, if we do get this trade ahead of the U.S. Open. I think we should in the next hour or so. I just don't really want to sit here for the next 40 minutes trying to say, come on, guys, it's coming, it's coming, it's coming. I'll probably execute this one, and we'll do this one in retrospect. I'll recap it on the U.S. mid-session brief. But remember, the one thing about RSI, and if you've never traded RSI, and a lot of people swear by it and they love it. Here's the problem with RSI. When it breaks into, say, oversold territory, that's pretty much your signal to buy the market. Well, if you get into a strong trend, even on like a 1 minute or 5 minute, you get chopped to pieces. And the reason why is this trend keeps going and it just stays in oversold or overbought territory for a long, long time. So you got to be careful trading the RSI in isolation. For most people, it's just a confirmation tool to show us when that momentum's sort of slowing down. I don't see it slowing down yet. I want to see this 9 cross the 20. We've got us in oversold territory, and then we're going to buy. I think the 1 minute chart is probably a pretty good time frame to be trading right now. Take a look at our volumes here on the E-mini NASDAQ futures. They're significant. These are significant 1 minute volumes. I expect a lot of volatility and maybe a snapback to the top side. For right this minute, though, we have to be very careful because that hawkish dollar, that hawkish USD is going to suggest that the dollar is going to rally and stocks are going to come off. This could turn into a big negative day. Now, as far as your DXY, you got your DXY right here, monthly chart. What do you got? Bullish break. We're now all of a sudden we're trading 103. Long-term anchor point right there at 103.35. I'm not saying sell that, but that's major resistance. Why? 13-month EMA up there at 103.36, and you've got a 50% at 103.35. That's big. That is big. I would be very surprised if the dollar goes above that, but I expect us to test it. So if I was trading the dollar, you kind of, I'm sort of thinking that, yeah, you probably want to be on the side of the dollar here today, especially hawkish NFP. Hawkish CPI. That's absolutely huge. So if I'm trading, does that mean I want to be long or short Euro USD? You probably want to be shorting. Let's go ahead to the daily. Do we have any trade locations that can help us? I mean, you can see this is the big downtrend. That's why that DXY is up, because the Euro USD is down. Remember, the dollar index is a basket of these currencies. Do I want to be long or short from right here? Spike high, spike low, 38% is 109.40. Do we want to sell it? Gun to my head. I got a trade right now. I want to be short the Euro USD. I don't want to be long. I want to be short. I don't want to be long. I think the dollar's probably going to gain puff throughout the day. We just got to wait and see. We're already seeing negative action in our U.S. indices. Now look at still in oversold territory. There's one more thing we want to check here. Be very careful with this gold market. If, in fact, we take out 26, we are going to go lower. Right now we're trading 26.17. If you wanted to sell, you got to wait for a little bit more pressure up there towards 26.29, 27, 26.27. Last thing I'm going to say about gold is this. High right there is 26.24. High right there is 26.24.60, 26.24.41. That is a failed auction. We only went a few ticks above yesterday's high, and we've reversed about $5. That means those institutions are sitting up there. They were waiting like playing a game of whack-a-mole. As soon as the bidders entered above yesterday's high, they got hit on the head, and they're now washed out. I think we come off. I'll be looking to buy. If you want to scalp down here again, you certainly can. I wouldn't be greedy with it, though. And if you wanted to sell up there, you certainly could. Other than that, as far as the dollar goes, how do you want to trade it? Do you want to put a sell on right now? 5-minute chart. I expect us to fill this tail in. I really do. So do I want to be long or short gold? Boy, that's tough. That's tough. I would wait for price to sort of rally up and hit our level, and then I think we could really get some work done from up there. Once again, we'll recap this on the mid-session brief. Right now, though, big bullish green candle on that release, a bit of a pullback, and now we're heading higher. So a lot going on, guys. A lot going on here in the gold market. Sort of a counterintuitive reaction to our CPI numbers. Once again, I'm going to check our interest rate expectations because that is sort of the straw stirring the drink right now. Let's see. One last time. What are they? Okay, now look what's happened. This is interesting, and this would be potentially a bullish market driver. Now they're saying there's a 90% chance of still a quarter-point rate cut down to 9%, that we're going to hold rates even. This is a futures contract. We have institutional players that are essentially betting on where they think interest rates are going to go. I think this is a major overcorrection. The action's crazy right now. Be very careful with what you do. All right, everybody, I'm going to sign off here for a few hours. I'll be back for the mid-session brief. We'll sort of unpack this price action. I'll give you a bit more insights into what the CPI report really means. As far as the Euro USD goes, do we want to sell it? Yeah, I mean, we're already sort of short here. We just got to wait and see. Wait and see what happens. I think that it's a pretty good short, though. I would be surprised if we bounce, but those interest rate expectations are everything. They're going to drive the dollar any which way but loose, so be careful there. And you'll notice right here on this DXY, let's go to a 1-minute chart and see how the dollar index has reacted. And what do you have here? sort of bullish, sort of bearish, big sell-off rally. This is tough. This is whipsaw action, guys. Be very careful here. And once again, it looks like gold's coming our way. So we got a shot. I would be at 27. 27.50 would be the sell for me, and that's the 13-period EMA, 13-day EMA. NASDAQ, are we finally going to get a shot? Okay, there's a couple green candles still in oversold territory. I think that this is going to cross over relatively soon, and the buyback will be on, and we just got to wait and see where we trade to. You know, it depends on where this goes. You could either, when we get this crossover, you could just take the position until we get another crossover, or you could be shooting for the top of market structure somewhere up there. All right, Mark Corp. Whew, thanks, Shane. Yeah, you're welcome, guys. Tricky. Very, very tricky. Don't be afraid. Listen, don't be a hero. You know, that's the old saying. There are no atheists in foxholes. Right now, the bullets are flying, and this action's crazy. The dollar's all over the map. That's going to be the number one market driver for equities, for commodities, for the currency pairs, all of it. It's all about the dollar right now. We're seeing the DXY all over the map. It looks like our trade's brewing right here. Watch that crossover. I think that's going to be a winner. I don't think we're going to get chopped up at all there. Too much volatility. All right, everybody. All right, your long gold, Rustani. All right, 26.47 is your take profit. Well, best of luck there. We'll see what happens with your trade. Like I said, I always want everybody to trade well. Just understand that today you can make a lot of mistakes. You can make a lot of mistakes. You could also get on the right side of some moves. We had some good ones. USD CHF pendulum was a winner. That was an absolute banger on that Great Britain pound. Went right down to 130.10 and then bounced. That's great. Beautiful thing. And then I think if you're on probably the short side of the Euro USD, you're right. But we just got to wait and see. Then we'll watch and see what happens to equities. All right, everybody, thanks for watching. We'll be back in a few hours to unpack the action and some of these recommendations. Trade the action well. And